Analyze this trade. This is a trade in which I made almost 94% in a month, in 28 days. And how I made this much return in just 28 days is because I am highly leveraged, which I do not advise anyone. Now, since day one, I have been taking leverage, so I have created my strategy considering leverage and everything. So I have grown used to it, my strategy is accustomed to that. So that is why it works for me and it won't work for you. So avoid taking any kind of leverage. And okay, so first of all, I should clear this out that I'll be speaking in English because at the end of the day, you will have to learn English if you want to learn trading, because most of the stuff out there is in English. Most of the stuff out there, it's by Americans. So you will have to learn from Americans how to trade. So you should know English. Without that, it is very, very, very difficult to understand and learn trading. All the content on YouTube is by Americans. All the books are by Americans. So you will have to learn English. So that is why I'll be speaking in English also. So I'll go through my methodology of how I took this trade, how I exited it, and everything, why I took this trade. So let's begin. It is a company called TVS Motor Company, and it manufactures two-wheelers. It manufactures really good quality two-wheelers, and it has a great edge in EV two-wheelers. It was one of the first companies that launched EV two-wheelers and has been selling two-wheelers since quite long in Indian market. So yeah, I have a certain bit of familiarity with the company. The first time I traded with this company is on this day, which is 7th of April. I bought it here. And if you go and look at the markets, this is where markets were. A huge, huge gap down, and I call it rocket fuel. A huge gap down, and it just shot up. And it gives such a rocket fuel to the market or to the stocks that they just go up and up and up after that. Now let's get back to TVS Motors. I was a little bit familiar with the company, and you can see there were huge green volumes. Look at the volumes here and look at the volumes here. All the green volumes were really, really huge, and all the red volumes were not that huge. So this is a sign of accumulation by big investors. Normal retail traders or investors cannot take the volume above average. Okay, it is only the work of institutional investors. So when retail investors are buying, they buy like this, below average volumes, because it needs a lot of volume to take a stock up. You need one participant or very few participants, one, two, three participants to make huge buying in bulk that takes the volume above average and the price also goes up. Now, this is a sign of accumulation. That is why I bought this. I had familiarity with the company and it just shot up and up and up and up and up. And I exited my trade here, almost here, yeah. But this is not the trade in which I made 94%. This is before that I made money in this stock. So once I make some money in a stock, I just keep a track of it, because I have figured out a medium to long term range of the stock. If I'm right once, that is what I believe in. I have made money in this once, I will make money in this again and again and again, because I have figured out the medium to long term trend of this stock. That is why I keep the stock in my watch list forever. If I once I make money in it, I'm just not taking it out of my medium term watch list. Now, what are these dots? I'll tell you what these dots are. These dots are more than 2.5% movement in the price with above average volume. When this happens, green dots appear. This is an indicator. I made it for myself using Claude, which is an AI platform. Anyway, and these red are more than 2.5 in negative direction with above average volume. You can see the number of green dots, so many green dots, so few red dots. This is also a very good sign. This shows that every time above average volume comes, price goes up. Again, another sign of accumulation. The more the green dots, the merrier. So I traded in this once. I took out my money and I made some profit. It was in my watch list because it was giving good returns. Let's go to its returns. And if you go to Tijori, which is a Zerodha company, it shows you returns. Look at the net quarterly net profit. This is September 2024. Grew by 42%, 21%, 70%. It's just growing. And it is also accelerating because September 2024 was 42%, March 2025 was 70%. Its financials are looking great. Its sales is also increasing 14%, 13, 10, next 16. There is not one negative quarter. All the quarters are positive, in fact, accelerating. Look at this, June. So I took the trade in April. That means this was the situation. This was the data I was looking at: 11%, 42%, and 21%. And this is the data I had been waiting for. If you go back to the stock, that data came here and this 28th April, and I was already out of the game because I don't want to hold my positions during quarterly calls. This is the data that I had: 11, 42, and 21. Sounds good to me. Then I waited and really good earnings came. These were the earnings that came: 70% net profit growth, 16% sales growth. Now, if you go back to the yearly performance, also see every year this company is showing growth: 31, 21, 14, 11. Now, this is the profit, this is the sales. So, these are all the green flags that I saw in the company. Now, I waited for this. I waited and I waited and I waited. If you go to weekly, what you will see is, isn't it forming some kind of a handle here? This is a cup that I see. This is the handle that is currently being formed. So that is why I was watching, closely watching it. It consolidated for a bit. I wanted to take a trade here. If you see, it took a great support at 50 EMA. The price was going down, but buyers were so heavy, buyers were so dominant that they took the price up. But I did not take trade here because I had some losses and I was very cautious. Now let's go to the next bars. Great, great. See, it again started consolidating. It is not like a one-way move. Now, this is where I thought of buying it. Why did I think of buying it here? Look at these big, huge green volumes. Look at the price movement. It is going out of the consolidation. Is it the best time to buy? Maybe yes. It might be the best time to buy. Why? Because the price is breaking out from this very small term consolidation with day low of the day as stop. It could have been a great trade. Why it could have been a great trade? Because just in case, this, what is this line? This line is a resistance. See, this line is a previous high. That is why if it would have came back, then you would have some a little tiny bit of margin and you could have figured out that breakout did not happen. It is time to get out. I always want to get into the stock before the breakout. Everyone knows breakout. Breakout is the stupidest concept that actually works. Breakout. Now I'll explain that. It is the stupidest concept that actually works. Stupidest why? Because everyone knows it. Every other book has it. If you take 100 trading books, 99 books would have breakout concept in that. That is why it traps the buyers. That is why hedge funds trap the buyers, institutional trap the buyers. Price will go up, it will break out, everyone will buy, institutions will sell. And when everyone's stop losses hit, the price will again start going up. This is what usually happens. That is why I don't want to buy breakouts. I want to buy the stock before the breakout, before the retail traders. But I did not buy here. Why? I did not buy here because I was having back to back losses in other stocks and I was extremely cautious. I wanted this stock to break out from here, which was definitely a good, it could have been a good buy because I wouldn't have bought it on breakout, I would have bought it on retest when all the stop losses have been taken out. That is when I would have thought of buying it, not on the breakout day. Okay, I did not buy. Go back to weekly. Oopsie doopsie. Look at this sweet cup. Look at the sweet handle. It's a weekly cup and handle, which is a really good pattern. It is a weekly cup and handle along with the big green volume. But it has not yet broken out. Time to wait. Wait a little more. I bought it on 13th of August. See a little consolidation here because there are a lot of sell orders here. Whose sell orders? People who would have bought in this range. People who would have bought in this range, they are still waiting to get out of the stock because it they have been in pain since so long. They are just thinking, just when price comes to my buying price, I'll just sell. I'll be break even. I won't be in loss. So many buyers who are thinking that I won't be in loss. Just when price comes to my buying point, I'll sell the stock. These That is why near the resistance it is consolidating a little bit. Buyers are buying and absorbing all the sell orders. See, brief consolidation because so many sell orders here, so many sell orders. Everyone wants to get out on break even. Everyone wants to get out on break even when they are in loss for very long. Let us zoom in. Oopsie doopsie. See green volumes, price going up. Look at this. Damn. Look at this. Another earning seasons and the stock goes up. Stock breaks out, makes all-time high. Now let us compare the performance of this stock to Nifty's performance. When Nifty is going down, when Nifty is what? 6.3% from its all-time high, and it is going down and down and down since 1st of July, 30th of June. This stock made all-time high. This stock came down and made all-time high. When Nifty was going down, what does this show? This shows relative strength. When all other stocks are going down, this stock is going up. The stocks that have relative strength have so much strength that when Nifty goes up, they go up the most. When Nifty goes down, they go down the least because they have strength in them. Now, when Nifty was falling, TVS Motor was going up. TVS Motor made all-time high. Broke out, came down. See, I told you when it breaks out, it takes out the losses, stop losses of the buyers. It goes up, down, 13th of August. This is the day when it retested and it went up. This is the day I took the trade. Now, how did I take the trade? I bought it in the first hour. This is when I bought it. This is where I bought it. Hourly breakout. This is where I bought it. Now, if you see, this is the hourly range, and when it broke out of this range, I bought it. This is the hourly high and low. It's called a range, hourly range. And when it was breaking the hourly range, I bought 3 lots of it. Okay. Now, as I told you previously that I was having some losses, so I was really cautious. Back to back entries I was taking in other stocks. I was experiencing losses, so my stop loss was pretty tight and I was getting a little bit scared. So after taking 3 lots, I sold 1 lot on this day. This day is 14th of August. Next day, let's look at Nifty. Nifty is trying to give a wedge pop, but Nifty had been going down and down and down and down. That is why I was a little bit cautious, because because there are sometimes what happens is, how do you know for sure that the stock has extreme strength? There is nothing for sure in stock markets. So I thought this might be a false breakout. When Nifty is going down and stocks are going up, sometimes, not sometimes, a lot of the times they give fake breakouts. They will break out and they will come back into the range. So I thought, what if it is a fake breakout? I sold 1 lot, one futures lot here. I had bought 3 lots, futures lot, and I sold 1 lot here, so that I have 2 lots left. But by the end of the day, when it shot back up, I just rebought that lot, because I thought it is going to be a candle like this, something like Marubuzu red candle, and it will start coming down. But what happened was, during the end of the day, it just shot up. It came down on this candle I sold. This looks a pretty scary candle. I sold it, and then price just went up. When price went up, I bought my lot again. Now I am again on 3 lots. Damn, look at that. The price went up 6.6% in one day. Okay, I'm switching from daily to hourly again and again. So here is the hourly chart. Okay, and this is the hourly chart. On 13th of August, I bought this. I showed you this was the hourly range, hourly high and hourly low, and I bought on hourly breakout. I bought 3 lots, 3 futures lots, waited on this candle. I sold 1 lot. I bought it back again here. I am back with 3 lots. Okay, this was the day I bought. Now on 18th August, it shot up 6.6% on the news of GST cut. Indian government cut GST on from in fact, it abolished 28% GST, and two-wheelers were the products on which 28% GST was charged. So now new GST would be 18%. That is 10% savings of tax. That is huge for people buying bikes, because bikes are expensive product. They are not like 5 rupee, 10 rupee shampoo pouch or 15 rupee soap bar. It costs a minimum lakh to buy a bike or scooty. So they were the biggest beneficiaries. Auto industry was the biggest beneficiary of that, and it just shot up like crazy. It shot up like crazy. Now I should have sold some here, which I did not. Happens. Because the stock went so up, I was like, okay, let's see what happens. But I should have sold one lot here, which I did not, and it turned out to be in my favor. But still, technically, I shouldn't have done that. Okay, so wait a second, I'll replay. See, it is just going up and up and up. Why did I not sell anything? Is because I used to trail 10 and 20 EMA. This is the 10 blue one, black one is the 20 EMA. So my strategy was to trail 10 EMA and 20 EMA. What does that mean? I will take my money out once it breaches, the price closes the 10 EMA, goes down the 10 EMA, and I will close the position when price closes below the 20 EMA. That was my strategy. I have changed my strategy and I take my money out of when it closes below the 5 EMA, which is this red line. This red line is 5 EMA, and I close my position if it closes below the 10 EMA, which is this blue. So earlier it was this blue line and black line. Now it is currently is red line and this blue line. But I still would have taken some money out when it shot up this much. Now I waited and waited, and the price went up and up and up. Ooh, look at that. If it was me right now, I would have sold here also. I would have sold one lot here also. This is a scary candle. But I don't know. It was just money coming in, so I just, and I was sticking to my rules. I mean, that is one thing that I did really, really good that made me so much money is that I stick to my rules. I was sticking to my rules no matter what the candle is. I will not take money out if it does not closes below the 10 EMA. Shot up and up and up and up. This was not the line. Then back then. Okay, so this is the first time, 4th September. This is the first time I sold some. This is the first time I sold some. Went up and up. This is the time when I sold the rest. Because I want to sell into strength. It was actually a lot of money. I was like, to hell with the rules, I'll just take my money out. It is just too much money. Why did I do that? In what cases do I override some of my rules? Is because when I am in a lot of losses, I want some money. Okay, that time I was in some losses. I was making back to back losses, and looking at that 94% return on my capital, I was like, I better take it out, man. I don't want to wait anymore. This is the time for which I sold. This was my first exit, and this was my second exit. Now, if you look at this is a 16.6% return. 83. It is somewhat 93% of the return that I managed. I must have sold it here, maybe. Yeah, something like that. So this was my trade. Bought it here. EMA support, breakout. Okay, so I'll list my some of the reasons. One is it is a breakout support. Two is it is an EMA support. Three is it has great financials. Fourth is relative strength was really good. When market was going down, it was going up. So these are some of the reasons why I bought the stock. This is how you manage your positions. This is how you make entry, and this is how you slowly take your exits. So yeah, this is the trade in which this is how I made 94% return. You always have to combine your trade with Nifty. Let's see what Nifty was doing back then. When did I? 13th of August was it? This is when I took the trade. This is when I exited the trade. Yeah, look at how Nifty made this double bottom. This and this. Always combine your trades with the Nifty, man. Always do that. Because when Nifty is going down, it is very difficult to go up for any stock. So the best way to trade is to combine your trades with the sector it is in. Like TVS Motor is in Nifty Auto, combine TVS Motors with Nifty Auto and to the Nifty 50, Nifty 500. Combine all these three. When all these three things are going up, it is the best possible trade. So yeah, this is the concept. Breakout retest trade. Okay, thank you. Taras, bye byes. And don't use leverage. I have built my strategy according to that, not for you to do that. It is highly risky. Anyways, okay, Taras, bye byes.